Hey, this is Matt from InvestiQuant. Today is Wednesday, October 28th, 2020. And this morning we saw the markets gap down sizably. In fact, our gap down in the S&P and the other instruments as well, we saw gaps greater than 100% of the 5-day average true range. So giant gaps down that have continued lower throughout the session. We are trading down at the lows at the time of this recording. And I figured we would take a look at this type of gap and go down scenario and see what has happened as we approach the close in a similar situation where you've just got a giant gap down and you continue lower. So let me go into Discover and set this up. All right, so we are going to look at all four instruments. The setup we're going to be looking at is based upon a time-based entry that enters the market long at 2:30 p.m. Eastern Time. It'll exit at the close, which is 4:15 p.m. Eastern Time. The opening filter I'm going to use today to show this type of giant gap is I'm going to make my own custom gap size filter, and I'm going to say that the gap size is a minimum of 75% of the 5-day ATR. Now, if you look over at the active today section, you can see what it actually was, and it was almost 130% of the 5-day ATR. I'm going to keep this at 75% just because this is a bit of a rare scenario, so I want to back it off a little bit and keep as many samples as possible while still capturing the idea that we're looking at here. So I've got a minimum gap size of 75% of the 5-day ATR. And then I'm going to go in the gap direction and say that it has to be a gap down. So that's a gap down of at least 75% of the 5-day ATR. Next, I'm going to go into the post-open filters. And all I'm going to add is we're trading in the bottom 25% of the range as of 2:30 p.m. Eastern Time. So I'm going to go to this intraday close versus intraday range. And I'm going to scroll down until I see close in the bottom 25% of the intraday range. Hit equals next to that. And then lastly, I'm going to go into the indicator section. And normally I would put a 200-day moving average and a 10-day moving average. But since this is more of a rare scenario and I want to keep as many samples as possible, I'm just going to put below a 10-day simple moving average. I'm not going to add the 200. I looked at both scenarios and it really didn't make much of a difference. So I'm just going to stick with under a 10-day simple moving average to keep all the results. And here we go. So these are the results of going long at 2:30 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you have a giant down gap, which I'm defining as gapping at least 75% of the 5-day ATR down. And at 2:30 p.m. Eastern, you're trading in the bottom 25% of the intraday range, and this is when you are below a 10-day simple moving average. Now, historically, we've got 24 samples for the S&P, the NASDAQ just 16, the Dow 27, and the Russell 12. So this is fairly rare where you're getting this giant down gap and continuing lower into the afternoon when below a 10-day moving average. So not a whole lot of samples there. If we look at the win rates, they have leaned to the weak side. So S&P 38% winners here, so that's pretty weak. The NASDAQ only has 16 samples, so it's easier to get kind of extreme readings, but we are seeing an extreme reading here where it's only 19% of those have closed above that 2:30 p.m. price. And then the Dow, 48%, so that one's a bit more neutral. And then the Russell weak as well at 33%. So as a group, there's not a lot of samples here, but if you kind of combine them all together and look at them as a group, they do lean to the short side historically. If we take a look at the average win, average loss, for the S&P, the average win, average loss are pretty similar in size. And what's more noticeable is those are pretty large numbers for late in the day. For an average win or average loss size. So some bigger moves happening there historically, not necessarily one being significantly larger than the other. With the NASDAQ, again, the NASDAQ has the fewest samples, though the average loss is quite a bit larger than the average win. That is true for the Dow as well. The average loss larger than the average win, and then the Russell pretty similar in size. So as a group, we're not seeing consistently average losses being sizably larger than the average win. It was kind of mixed. We have a couple that are neutral and a couple that the average loss is larger. But historically, this pattern has been a bit weak, so maybe there's more downside into the close if this keeps up. So hopefully you found that helpful. Good luck the rest of the day, and we will see you tomorrow.